Welcome back to Investing Talk Podcast. Today, we're taking a closer look at Gulf Resources, ticker GURE. We've got a bunch of information here: asset buys, operational hiccups, financials, stock action, the works. Our
Yeah.
job is to kind of sift through it and pull out what really matters for understanding this company right now. Think of it as your personalized briefing on GURE. Okay, let's try and understand this company.
It's quite a picture, isn't it? You've got this company making moves to grow, buying assets.
Right.
But at the same time, they're wrestling with some, well, pretty big operational challenges.
Let's start with the positive then, the expansion part. Gulf Resources, through a subsidiary, Hengda Salt Industry, they recently bought up some salt lands.
Mm.
Seems strategic, like they want to grow their operations.
Yeah, I think that's a fair assessment.
Right.
Acquiring salt lands points toward wanting to increase production capacity down the line.
Makes sense for a salt producer.
Absolutely. It suggests they're looking ahead, maybe anticipating more demand or trying to get, better efficiencies with scale. It'd be interesting to see how management frames this in their long-term plan.
Okay, and then there's the governance side. They had their annual meeting, elected 7 directors, appointed GGF CPA as auditors.
Standard corporate procedure, pretty much.
But worth noting for transparency.
Definitely. It's basic housekeeping, but essential for accountability to shareholders. Shows the structures are in place.
Now, things get a bit trickier. Operationally, they had to temporarily shut down bromine and crude salt facilities. A government directive, apparently?
And that's significant. A major development.
Because?
Well, because it hits them right where it counts production. Bromine and crude salt are core products. So a shutdown like that directly impacts their ability to make and sell stuff.
Which likely flows through to the financials we'll get to.
Precisely. And it also flags potential regulatory risks in their operating environment. You have to wonder, what's behind that directive? Environmental? Safety? Something broader?
Good question. And it seems like that directly feeds into the Q3 2024 financials. They reported a huge drop in revenue, didn't they?
A very substantial drop, down almost 62%, landing at about $2.24 million for the quarter.
And they specifically cited problems in the bromine and crude salt markets.
Which connects right back to those shutdowns we were just talking about.
The timing lines up.
It really does. It starkly highlights how sensitive their revenue is to those core operations being online and the market conditions for those specific products.
Okay, let's shift to the stock itself, GURD. As of mid-April 2025, the price was around 0.795 cents. And it had seen a bit of an upward trend recently.
But it had, yes. Which is interesting given the other news.
Why interesting?
Because while the price has ticked up lately, maybe on that expansion news or just speculation, the forecasts suggest a potential decline over the next year.
So disconnect there. Recent positive momentum, but a more cautious outlook.
Exactly. That divergence is something to really think about. What's driving the recent buying? Is it sustainable if the forecasts are pointing down?
Could be short-term optimism versus longer-term fundamentals.
Could be. Or maybe the market is anticipating something the forecasts haven't fully captured yet. It definitely warrants a closer look.
Let's zoom out a bit. What's the general environment like for the chemical industry these days?
Well, it's got its usual pressures, things like volatile raw material prices, that's always a factor, and the constant need for regulatory compliance.
Which we saw Gulf Resources bumping up against.
Right. Their stated strategy involves resource allocation, geographic diversification, basically trying to manage these industry-wide challenges. And you can't ignore the broader Chinese economy either.
How does that play in?
A slower Chinese economy, especially if construction or manufacturing slows, that can impact demand for chemicals like bromine.
Okay. And you mentioned regulatory compliance. They had that issue with Nasdaq filings before, didn't they?
They did. They faced non-compliance notices for filing late.
But they fixed it.
Yes. They managed to regain compliance in October 2024. So they addressed the problem, which is positive. But, the fact it happened in the first place suggests maybe some past issues with their internal reporting processes. It's an area to keep an eye on.
So linking back to the Chinese economy, the weakness there, particularly in real estate, that's a risk for their bromine and salt sales.
Absolutely. That's a key risk factor. Less construction, potentially less demand.
But on the flip side, any opportunities?
Well, they have made investments in things like flood prevention infrastructure, and obviously the new salt fields we mentioned earlier. Those could lead to increased production capacity, which presents an opportunity if demand is there or if they can operate more efficiently.
Let's dig into the financials a bit more. I noticed something odd in the source's different revenue figures. One said around $12.8 million, another closer to $30 million.
Ah, good catch. That almost certainly means different reporting periods are being cited.
Like maybe one is annual, one is trailing 12 months or something.
Exactly. Or just data from different points in time for different providers. It's a classic example of why you always need to check the as of date and the source for financial data.
Makes sense. But we do have some clearer metrics. Their 5-year sales growth, around 9.3% annually. That sounds pretty solid compared to the sector.
It is better than the sector median, yes. It shows some historical ability to grow the top line.
But I sense a but coming.
Well, the but is the current profitability. The earnings per share, EPS, is negative, significantly so, at $9.26.
Meaning they're losing money per share right now.
Correct. Which, given the operational shutdowns and market challenges, isn't entirely surprising, but it's obviously a major concern. And because EPS is negative, you can't calculate a PE ratio, a standard valuation tool.
Okay. What about debt? I saw a debt-to-equity ratio that looked incredibly low, like 0.04%.
That's right. Very, very low debt relative to their equity.
Which is good, right? Less financial risk from borrowing.
Generally, yes. It suggests they aren't heavily leveraged, which provides some financial stability.
Another.
But look at their cash flow from operations. It's also significantly negative, $32.75 million.
Whoa. So even though they don't have much debt, they're burning through cash from their actual business activities.
That's what that figure suggests. They're spending more cash running the business than they're bringing in. That's not sustainable long-term without changes or external funding.
Okay, that low debt looks a bit different in that context. How about their competitive position? Do they have, like, patents or a strong brand? Any moat?
From the information available, not really clear competitive advantages like that. No obvious strong patents or brand recognition mentioned.
And they're small, right? Market cap was around $7.6 million.
Very small. That puts them firmly in the micro-cap category, lower end of the chemical sector.
Which means
Potential for high growth, maybe, but also typically higher risk, less liquidity in the stock, more volatility. It's a different risk profile than a large-cap chemical company.
understood. And operationally, just to recap 4 segments, bromine, crude salt, chemicals, natural gas.
Right.
And currently it's a mixed bag in terms of what's running.
Yes, 4 bromine salt factories are apparently operational, but 3 others are paused either for regulatory reasons or construction.
Okay.
And their natural gas operations in Sichuan are also on hold, waiting for environmental approvals. So yeah, lots of operational variability right now.
So if you try to boil this down, red flags and potential strengths, what stands out?
Well, on the risk or red flag side, definitely the microcap status and the risks that come with that. The significant impact of those regulatory closures on their output and revenue is a major one.
Yeah.
And maybe limited recent detail on debt and leverage, although the ratio itself is low.
And strengths.
On the plus side, they seem to have a notable position, historically at least, in Chinese bromine production.
Yep.
And they do have some diversification across different product applications.
Okay. Lastly, that stock forecast for 2025. You mentioned the divergence, but the range itself is huge, isn't it?
It's incredibly wide. The sources show a low, potentially around $0 or 8 or $0 or 9, and a high maybe up near $2.58.
That's massive volatility baked into the outlook.
It really is. It just underlines all the uncertainty we've been discussing. Can they get all facilities back online? Can they manage the regulatory environment? Will the Chinese economy cooperate? How will the new assets contribute? All those questions are reflected in that wide forecast range.
So looking at all this information, Gulf Resources seems like a company actively trying to grow with those salt land acquisitions, making strategic moves.
But simultaneously facing these really serious operational, regulatory, and maybe market headwinds.
That sums it up pretty well.
The recent stock price bump looks interesting against the more cautious forecasts, and the financials show that past growth but current profitability and cash flow issues.
Right. Low debt is a positive, but the negative EPS and cash flow are significant concerns.
And those temporary shutdowns, plus being a microcap, definitely add layers of risk. But maybe those asset acquisitions could pay off if they navigate these challenges. That's the potential upside scenario, yes. If they can overcome these hurdles, the expansion could lay groundwork for future growth.
Definitely a complex picture. We absolutely encourage listeners to dig deeper into the company's own SEC filings and look for the latest news for the most current information. What's the one thing that really stands out to you from all this, or what's the biggest question it leaves you with? Let us know what you think. Subscribe, Like and drop a comment if you found this breakdown useful. We'd love to hear if you want more analyses like this on companies shaping your investment decisions.